Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your daily technical analysis of foreign exchange markets.
Eurodollar. A bullish white soldier yes after the previous session's indecisive doji cross and recent low. The market used as a base the lesser Fibonacci line at 106.1313, with I suspect support from the nearby dark blue highlighted lower time, currently 105.68, of the late December 2023 to mid-March 2024 bearish Andrews pitchfork. Looking topside, prices approached but did not test the combination of the April 2020 low at 107.25 and the bright red highlighted middle time, currently 107.15, of the bearish shift pitchfork for the same move as the bearish Andrews pitchfork. Now, on the surface, last week saw a keen and dramatic move lower that ended up as a weekly key reversal down. And not just that, but an immediate countering weekly key reversal down after the previous week's weekly key reversal up. So quite a dramatic show of bearish strength. However, this still was not all, as when I collated the weekly key reversals in the various markets I covered this past Sunday, I found that we had a total of 20 currency pairings that had weekly key reversals last week, and the majority of them, 11 pairings, were immediately countering weekly key reversals. And all of them, and I even include the ones on the crosses, were US dollar positive or seemed to be US dollar positive. This is something I do not recall ever seeing before, and it makes me concerned, not because they are all one-way dollar positive, but that an immediate countering key reversal, weekly or otherwise, is not always constructive in the way it shows at face value, as in US dollar positive here. Too many times I've seen this as an indication of a troubled market with indecision, not just on a daily scale, but here on a weekly scale. I'm not saying to discount the dollar positive, but to watch out, as it may be part of a greater action that does not necessarily fit in with the immediate dollar up narrative. In other words, just beware. Going back to the market, we now have a large amount of overhanging ammunition overhead, stretching from mid-November last year till last week. Now, I'd previously pointed out the bearish bow tie formation made on Tuesday last week. The theory behind this suggests two things. Firstly, look to which way the moving averages move after the crossover to indicate the next direction, which we can all see is downwards. Secondly, between 15 to 20 sessions after the crossover, we may see one or more of the following: a change in trend, a reinforcement of a trend, volatility. In this case, it will be between the 30th of April and the 6th of May, so watch out. Finally, I have repeated this often here, but please pay attention to the crossover of the time circled on about the 26th of April and the 9th of May. Around, and usually a very short time after, very short time after, one may see volatility. Now, so far today, a small move higher towards the bright red middle tine above, but not very much. Cable, aka sterling against the US dollar. A bullish engulfing pattern yesterday, if only just, after the previous session's indecisive spinning top and recent low. The market tried to move up and close over the recent lesser Fibonacci line at 124.60, only achieving partial success with a move over, but no close over as yet. On the surface last week was a keen and dramatic move lower. But there's more. We ended last week for a weekly key reversal down, and not just any weekly key reversal down, but an immediate countering weekly key reversal down after the previous week's weekly key reversal up. So quite a dramatic show of bearish strength. However, this still was not all, as when I collated the weekly key reversals in the various markets I cover this past Sunday, I found that we had a total of 20 currency pairings that had weekly key reversals last week, and the majority of them, 11 pairings, were immediate countering weekly key reversals, and all of them, and I even include the ones on the crosses, were US dollar positive, or seem to be US dollar positive. This is something I do not recall ever seeing before, and it makes me concerned. Not because they are all one-way dollar positive, but that an immediate countering key reversal, weekly or otherwise, is not always constructive in the way it shows at face value, as in dollar positive here. Too many times I've seen this as an indication to a troubled market of indecision, not just on a daily scale, but here on a weekly scale. I am not saying to discount the dollar positive, but to watch out, as it may be part of a greater action that does not necessarily fit in with the immediate dollar up narrative. In other words, just beware. Finally, I'd previously pointed out the bearish bow tie formation made by the moving averages the week before last. The theory behind this suggests two things. Firstly, look to which way the moving averages move after the crossover to indicate the next direction, which we can see is downwards. Secondly, between 15 to 20 sessions after the crossover, we may see one or more of the following: a change in trend, a reinforcement of a trend, volatility. In this case, it would be between the 26th of April and the 3rd of May, so watch out. So far today, a small move higher, barely making it over the lesser Fibonacci line at 124.60. Euro sterling. A strong and unusual key reversal up yesterday. It was unusual as it came after a prior bullish pattern, in this case an immediate countering bullish double. It was strong because despite the higher open, prices dipped down through the purple highlighted lower trend line, currently 85.36 of the late January to date expanding wedge pattern, which is currently 85.36 to 86.39, before turning around back up and rising up through the same purple lower trend line. Plus the following: the combined lows of December 2022 at 85.45 and December 2023 at 85.47. The very slowly rising short medium moving average, currently 85.50. The dark blue highlighted upper time, currently 85.64 of the November to December 2023 bearish shift pitchfork. Only finally stopping at the flatlining medium moving average, currently at 85.73 of the closing between this moving average and the breached upper time. Now, so far today, already another test higher to the flatlining medium moving average, as well as dipping below the dark blue upper time, mainly still edging higher, though still capped as yet. US dollar against the Japanese yen. An immediate countering bearish harami yesterday, if only just, after the previous session's bullish closing white Mariposa, a new high not seen since 1990. On balance, yesterday's action looked like it was a sudden insecurity by the market after the previous two sessions had penetrated and closed not only a new 21st century high, but over the bright red highlighted middle time, currently 154.42 of the July to December 2023 bullish Andrews pitchfork. Further up is the June 1990 high at 155.78, whilst below we have little in the way until the old October 2022 to November 2023 and recent March and April highs in the 151 even to 152 even zone. 151.90, sorry, to 152 even zone. Overall, we are obviously still within this bright red highlighted pitchfork, but we're also still within the larger purple highlighted February 2022 to January 2023 bullish shift pitchfork, in between the middle time overhead, currently 159.52, and the lower time below, currently 145.44. So far today, well, a move lower, back below the bright red middle time, but not venturing too far on the downside just yet, and keeping in close touch with the middle time. US dollar against the CNH, the offshore Chinese yuan, a quite large and bearish engulfing pattern yesterday after the previous session shooting star pattern type 1 bearish. The move lower was quite large enough to threaten a possible immediate countering weekly key reversal down. However, would have to push below 723.49 to make it a true possibility. Mulling over this possibility, last week was a weekly key reversal up, so quite a dramatic show of bullish strength. However, this still was not all, as when I collated the weekly key reversals in the various markets I cover this past Sunday night, I find that we had a total of 20 currency pairings that had weekly key reversals last week. And all of them, and I even include the ones on crosses, were US dollar positive, or seem to be US dollar positive. This is something I do not recall ever seeing before, and it makes me concerned, not because they're all one way, dollar positive, but the majority of the ones I saw were immediate countering weekly key reversals. And an immediate countering weekly key reversal, weekly or otherwise, is not always constructive in the way it shows at face value, as in US dollar positive here. Too many times I have seen this as an indication of a troubled market, with indecision, not just on a daily scale here, but on a weekly scale. I'm not saying to discount the dollar top positive, but to watch out, as it may be part of a greater action that does not necessarily fit in with the immediate dollar up narrative. In other words, just beware. Now, prices dropped down through the very recent support of the extension to the lower trend line, currently at 725.86, of the dark blue highlighted recent ascending triangle. The drop was halted just before testing the upper trend line extension for the same ascending triangle pattern, as currently at 723.77, with a little below the slowly ascending long moving average, currently 723.21, and the short medium moving average, currently 722.49. All of this is in the shadow of last month's monthly key reversal up here in spot USD CNH, the offshore Chinese yuan. However, that is not all. As though I do not show it here on this chart, there was also monthly key reversals up for March in USD CNY, the onshore Chinese yuan, plus monthly key reversals up in March for the USD CNY 1 month NDF and 1 year NDF. All these are quite significant, especially if you have follow-ons, and this is where the rub is, as last week saw not just a weekly key reversal up in spot USD CNH, but also in the USD CNY, the onshore Chinese yuan 1 month, as well as the 1 year NDF. Altogether quite an achievement. Okay, so 3 weeks ago I laid out some ideas for potentials below for the then break lower from the ascending triangle pattern. Thus a primary target X is down in the 716.05 zone, with a secondary hard to reach target X1 down in the 710.70 zone. The opportunities below have been severely curtailed right now, but for the moment I'll keep those targets on my daily chart, as we've already had a false break lower, more recently what looked like a false break higher as well. So, as I say, I will keep them on for now, but I'm happy to retire them in a heartbeat. Yet, I am also mindful of the potentials topside now from the recent move higher. So for good order's sake, I've marked for now a primary target X2 topside for a continuing move higher at 730.05, and a secondary much harder to reach target X3 up at 732.80. So far today, a slightly higher open before a dip to try and approach the dark blue upper trend line extension, but once again, the market has seemingly rejected a move below this for now, and instead turned upwards, looking like a possible bullish harami right now. I note how the market has not as yet risen up to test the dark blue lower trend line extension above. US dollar against the Mexican peso. A bearish dark cloud cover pattern type yesterday after the previous 6 sessions run up. It was not surprising to see the market halt and turn away lower, as just overhead was not only the March 2016 low at 1709.23, but the fairly close combination of the dark blue upper time, currently at 711.96, of the December 2023 to January 2024 mildly bearish shift pitch hawk, but also the long moving average, currently at 1716.12. A neat feature on the close was how it was right on the very slowly declining medium moving average, currently at 1695.78. Nearby we now have overhead congestion at the April 2016 low at 1703.89 and support at the congestion at 1688.97, plus the flatlining short medium moving average, currently 1683.05. This is all well and fine, but something larger is afoot. The action last week and this has already set up the conditions, with still nearly 2 weeks to go to see a monthly key reversal for April 2024. Thus, if we close on Tuesday, the 30th, either over 1704.90 or under 1653.10, then we'd be on. Anything in between would have the lesser outside month instead. Right now we're looking at an outside month. Now so far today, nothing. Opening about where we closed last night and moving either side of the medium moving average.
Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.